Greetings and thank you for joining us at FutureMoneyTrends.com. It is Monday, May 1st. I have an important update interview, and I'm with Rick Rule of Sprott Global. Now, if you guys don't know Rick has made himself and hundreds of other people, maybe thousands of others, fortunes. He's done very well investing in what is probably one of the most difficult places to invest, and that is the junior natural resource space. Truly, one of the most difficult places to invest on the planet. If you're attracted to this sector, I highly recommend you save your wallet and save your life some stress. Call up Sprott Global, Sprott Asset Management, and set up an account and partner with the best, the people who know what they're doing in this very, very difficult sector. Rick, thank you for joining us.
Thank you for your kind words, and it's a pleasure to be interviewed by you.
Rick, I wanted to turn our attention. We had done an interview a few weeks ago, and we talked a lot about the precious metals and some of the geopolitics going on. But the industrial metals I want to turn our attention to, they have been doing very well last year and this year. And for many of the listeners who have solely come into the natural resource shares for gold and silver, what is the current bullish case for the industrial minerals? And do you feel that they are also in a bull market along with the precious metals?
Yeah, let's answer those questions in reverse order. In the first instance, I think that the precious metals bull market is probably in baseball parlance in the third inning. The base metals market is probably in the first inning. So they probably have further to go. Secondly, historically, although the precious metals markets have attracted the most investor attention, base metals mining companies have traditionally made more money. The joke in the mining industry is that you raise money on gold and you make money on copper. So I am certainly attracted to the base metals markets. When I look back over 40 years, although the gold and silver markets have been good to me, I've made much more money on non-gold discoveries than on gold discoveries.
In your career, where have those big gains come from? A specific commodity, or is it through discovery?
Really, some of both. My own technique is to try and buy stuff when it's deeply out of favor. And if I have the opportunity to buy a deposit that's deeply out of favor, I'll do that. If I have the opportunity to back an exploration team that is assembling very high-quality prospects that are out of favor, I will do that. I have enjoyed success with companies like Paladin Resources. We've talked about that before, 10 cents to $10, that combined a deeply out of favor a deeply out of favor commodity with a discovery. I've also made money on pure discovery plays. I'm thinking back many years ago to the Arequipa discovery as an example, 30 cents to $30 in 2 years. And I've made money on pure deposits. I'm thinking again back to 1996. The commodity that was out of favor was copper, and the country that was out of favor was Congo. Tenke Mining went from a low of 19 cents to an $18 a share takeover. The truth is, Dan, like yourself, I'm fairly agnostic as to how I make my money.
Rick, just briefly on these type of returns, 10 cents to $10. And I know that actually, I believe it went from 10 cents to a penny and then $10.
Yeah, I tried to X out the painful part, but that's right, it did. 10 cents to a penny to $10. That's right, a round trip.
Okay, how do you even make money on those? Because I know how you can make money on those, but I'm wondering, do you have to be in a coma? Do you have to have restricted stock? Because most of us, man, if you saw something go from 10 cents to $1.50, I don't care how much you're in love with the management team or the project, you'd probably sell a good portion of that. I mean, do you have...
Well, that's very accurate, Dan, and that's the subject of a whole interview if you want. In the first instance, I don't think I have ever enjoyed a 10-bagger in my life where the stock didn't decline 50% before it went up tenfold. So part of the secret of enjoying extraordinary gains is that you have to have the capacity for a lot of pain on the way to the gain. But the second thing is, when any of us talk about moves from 10 cents to $1, believe me, I didn't buy all my stock at 10 cents, and I didn't sell all my stock at $10. One of the great speculators of all times, Bernard Baruch, said the only guy who ever bought his whole position at the bottom and sold his position at the top was a liar.
Rick, do you prefer more liquid exchange traded metals? For example, for listeners, gold versus cobalt or uranium versus zinc. Do you tend to, are you attracted more to gold and zinc versus, let's say, cobalt or, another mineral that's not so easily traded?
I don't like really thin metals normally. Like, you wouldn't see me as a sort of a zirconium investor. So I prefer the more liquid metals. But the truth is, Dan, what I really prefer is the stuff that's deeply out of favor. I prefer the commodities that if I talk to a broad audience, I would see them start to nod off, go to sleep, or exit to the men's room because they were bored to tears, or better yet, terrified.
With that said, don't talk about uranium. Nobody wants to hear it. Rick, you recently invested in Calinex Mines, a company covered by the Future Money Trends letter, somebody who I've worked with for quite some time, Max Porterfield. From what I understand, you entered the stock based off of drill results. They've since had 2 additional press releases, one that just came out this morning. How does today's news play into your overall thought process for this investment?
Well, I have to correct you. I bought it off a drill hole, but I bought it off a drill hole in a district, the Flin Flon district, a famous volcanogenic massive sulfide district in northern Canada that I've been familiar with for 30 years. It wasn't just an extraordinary drill hole, 12-meter thick drill hole of 6% base metals. It was an extraordinary drill hole in a world-class district. So it's important to understand that while the data point was valuable, the data point in the context of the district is what was most valuable to me. Having given you that disclaimer, we can move ahead. The drill hole that was released this morning, while it was attractive, was not anywhere near as attractive as the first one, unless, again, you take it in context. The first drill hole was, a very, very broad drill hole. This one was 2.6 meters thick. The last one was a 6% intersection. This was a 3% intersection. 2.5 meters of 3% base metals is certainly attractive, but at the depth it was at, it wouldn't get your heart racing, except that this was down dip from a truly exceptional hole in a world-class district. The data point that we have now is that they're beginning to establish the geometry of the system. Doesn't mean it's going to be big, but they are beginning through a combination of tools to get a sense of the geometry of the system. We've established as an example that there's probably a southwest plunge to the chute. With it becoming more copper-rich to the west, we assume that they're getting closer to the vent in the west. The copper travels less far. What makes this hole particularly intriguing is, as I say, it is related to the discovery hole, which was a truly exceptional hole. And more importantly, and they are in an absolutely world-class base metals district. None of this, by the way, guarantees that we're going to be successful. But the more data points we get, the better off we are in terms of estimating the size and potential commerciality of this discussion.
Rick, as you know, Calinex is focused on exploring in the two regions of Flin Flon and Bathurst. The company recently announced that it's beginning exploration at its Superjack and Nash Creek projects. There's also a famous mining district. With your investment, you did say you came into it because of a drill hole in a world-class mining district. Are you also looking at the other exploration projects that they're doing, or do you consider that potentially icing on the cake if you get the answers that you're looking for in Flin Flon?
Yeah, I mean, Bathurst to me is an interesting camp. Flin Flon to me is an absolutely great camp. The expectation of success on any individual exploration hole is lousy. So while I am attracted to the exploration acumen of the Calinex team, and certainly I have respect for the Bathurst camp, to me, that's the icing on the cake. I own this thing because of the Flin Flon discovery.
Resource stocks are cyclical, Rick. With global demand in 2017, is the U.S. as big of a factor going forward as compared to, say, 20 or 30 years ago?
Well, statistically, no. statistically, the rest of the world is beginning to catch up. But it's important to note the U.S. is the world's mouth. If we ever have an economic recovery in the United States, particularly if we have one that isn't driven by artificially low interest rates, because of the size of the U.S. market, the potential impact of a U.S. recovery is more important probably than any other factor in the world, frankly, including China. Among other things, a U.S. recovery would presage a Chinese recovery because Chinese growth has been driven by making stuff to sell to us. And the more stuff that we can buy, the more money they have to build. While the U.S. isn't the only economic factor in the world, we are still at in excess of 25% of world's GDP, the world's mouth.
Overall, how is the demand coming specifically out of Asia and China? Has it let up? Because, I mean, I get mixed stories. You'll hear stories about it's falling off a cliff, and then the next story on the press is that it's doing just as good as it was 10 years ago. What is the demand like out of Asia and specifically from China?
We're seeing relatively subdued demand relative to the demand growth that we saw 4 or 5 years ago. We are, however, in a bullish sense, sensing renewed optimism from our own Chinese clients. The spirits of our Chinese clients were very, very subdued 2 years ago, and their willingness to do outbound resource investments was non-existent 2.5 years ago. The increasing confidence of our Chinese clients tells us that both they and the Chinese state believe that a recovery in Chinese demand is underway. While we haven't seen it yet, the newfound aggressiveness of our Chinese clients tells me even if they haven't seen it, they believe it to be so. The Chinese state does one thing. The Chinese parastatals do another. And we're cautiously optimistic based on what they're doing.
All right, Rick Rule of Sprott Global, thank you so much for your time again. Everybody listening to this, truly, if you want to invest in this sector, there's only one way to do it. You need to partner with the best management teams. You need to partner with the best people that are investing in this sector. So much going on behind the scenes. I highly recommend you go to Sprott Global, Sprott Asset Management, and open up an account, invest directly with them. Don't even consider this to be the core of your investments. This is a special part of your portfolio that it requires expert attention. Rick, again, thank you so much for your time.
Thank you for your kind words, sir.